Good morning, everybody. Welcome to my daily plan. Oh, and my erstwhile young protege. Actually, he's not my protege because we do different things. Has just entered the studio just in the nick of time. Just in the nick of time. And
Good morning, everybody.
get the share screen ready. And I don't know how many of you were watching the pre-market action, but I assume that you were to some extent. Good morning, everybody. Let's get right to it. So at around, when was it? 5:15 a.m., 5 a.m., right around here, 5:15. Yep, I was sitting there kind of scribbling my daily plan, looking at stuff, looking at VIX, whatever, looking at this, which we'll talk about in a minute. The VIX decomposition index, which I'm finding really useful the more I play with it. We'll talk about that in a minute. So as I was messing around with that, I glanced at my E-mini chart that's overhead over there, and I saw down goes Fraser big time. I checked for news, checked Twitter, different discords where people seem to know stuff, and Perplexity and Rock and everybody. Nobody knew anything. And so I have to assume that unless there's some secret news out there, that it's noise, it's low liquidity overnight ahead of PPI bank earnings that had a meh reaction yesterday, Supreme Court verdict at 10 o'clock, even though we think we know what's going to happen. Maybe we don't know what's going to happen, or maybe we don't know what the reaction is going to be. I would think that's already factored in by institutions, however they bought E-mini and sold or did synthetics, whatever they do. I would think that they're kind of positioned, but who knows? What's the difference what I think? Because I think it doesn't mean it's true. So maybe that's what's going on. We have, of course, everybody knows the geopolitical risk, Iran thing, the imminent invasion of Greenland, which is going to be a tough battle. We have whatever, there's all kinds of stuff, going on. So that might be what happened, just kind of strange the way it spiked. And of course, we got a VIX spike with it. Is it here? It's here. We got a VIX spike with it. Now VIX is 17. And I remember me saying yesterday, when VIX was like around here, like right before the open, I was doing this very same broadcast, and VIX and the VIX futures were like pushing 17 and change. I forget exactly where they were. Yeah, here we go. Monday, they were. It was Tuesday, right? So they were somewhere around here on Tuesday, 17 and change. I said that didn't make sense, but apparently they caught up to each other because this and this meet somewhere on VIX expiration, which is next week. So I was thinking 17-ish, at least last week, was where we would resolve. We'll see. Maybe I was wrong. We'll see. 16, 17, we'll see. We'll see what happens when the event vol comes out. Because, we had yesterday, the VIX 9-day, which is a short-term VIX, spiked a little more than the VIX, but not by a crazy percentage point amount, a point or two. Nothing to get nutty about. And while we're doing volatility, we're not exactly doing it in order, but that's okay. And the VIX-VVIX ratio is fine. There's no real stress there. So the VVIX and the VIX are kind of dancing along the way they're supposed to. Volatility, demand for VIX options. While I'm on the topic, and I have dragged you down the rabbit hole, everybody, let me Let's blow this up for a second here. So this is the VIX Decomposition Index, and there's a paper right here. We could read about it, or if you don't feel like reading about it, throw it into AI and tell it to explain it to you. It's actually a good read, 20 pages, not too bad. And this is what happened to VIX, breaking it down to pieces. So sticky strike shift and parallel shift, as we moved up and down the surface, everything shifted kind of the way it's supposed to. Simple version of that. Sticky strike shift is as spot moved, volatility toward that should move. Okay. Put skew was up, call skew was down. That's what you need to know. So people were buying puts and selling calls. Standard defensive collar kind of stuff. Sell calls, buy puts, protect yourself, hedge yourself. Downside convexity went up the same amount, upside skew went down. Okay. Upside convexity was down. Okay, call skew. I mean, one is call skew, one convexity. In the CBOE note on the weekend, they mentioned that on Monday, but for the last week, that the 10 delta to 25 delta put ratio, the price of one to the other, was extended. So people are overpaying for 10 delta puts for out of the money stuff, but they're not really paying up for one standard deviation, standard hedging stuff. So it's kind of funny positioning, and that could either be a tailwind if when those puts expire, although they're 10 delta, so they're not that close, or if we break and those 25 delta puts are still cheap, then that could kind of look a little nasty. Okay. Now let me get out of the weeds and get back to somewhat normal trader stuff. Okay. And I guess I'm here. Okay. All right, so overnight we pulled back to this. I have the right. Yeah. Okay. Overnight we pulled down to this area here, and again TA 101. Look left. There it is. We pulled back to this zone 69.25 ish, whatever, and now we're trying to kind of establish a range. The PPI came out. Oh, anybody know what happened to the PPI? I mean, it looks like nothing horrible, nothing great in retail sales. Nobody got euphoric and nobody got depressed. So we're just kind of shopping around. I don't know if there was much volatility coming out of the chain. Doesn't look like it. And maybe we'll circle back to that in a minute. And let's take a look real quick at, so let's look at some of the levels and lines. All-time high was near 69.85. We closed yesterday on the low at 69.38. We hit the low of the day at the end of the day at 69.38. Closed near that 69.65 all-time high closing range. The 5-day range has been 6,900 to 6,985-ish. If we go back 10-day, the context kind of changes because we have that gap. We have that Friday gap. We have this gap fill here. Now we go back further, we have the Thanksgiving gap. So we have a couple of gaps down there, depending how far back we go. This is the first gap fill area that the TA people are worried about or say must be filled. We have the 20 DMA. Actually, it's higher now. I have to change that. And so those are kind of like the main levels that we're looking at. PPI November margins for final demand, trade services, whatever. I don't know. I don't know what that means. I'm not going to lie. I'm going to make something up. Okay, so the expected move was about 6,900 when I checked before, around 30 points at 69.65. Okay, and so let's talk about the trading box. And this is options depth here. And as you can see, it's kind of a mess. We have this main zone here that we're kind of trying to hold 69.20 and lower. Positive gamma market makers buy as we go down, but then sell if we get too far away. So we have this little box right here, 25 to 40, with 35-ish where we've been trying to top out, kind of like the vector resolution. Actually, vectors were kind of third semester of calculus. Second semester sucked. First was easy. Third semester I thought would suck because mostly vector resolution and stuff, which actually kind of was pretty logical and made sense. And now we're going back more than a half a century, so I might be a little rusty. Okay. If we get over 40, we have a kind of a 40, 50 kind of area where you might expect it, the round number with a little target here. Now in the overnight session, when we closed, this looked like the zone, that we would be in. It looked like we would be in the 40-ish to maybe 85 zone, yesterday's high, but the whole thing has shifted down. We've shifted everything down. So the boxes are still the same, so to speak, but just where they overlap and how they work together. So in plain English, 69.50, 580 overhead friction, 69.15 trapdoor, we lose that, 6900 shows up, 6900 accelerant. If that breaks, then we're heading to the 20 DMA and that gap fill and all that kind of thing. Overhead, we do have, if we can get over 69.80, 85.75, yesterday's high, we do have a ladder up that looks like it's way too far to reach now, but just because it looks like it now at 8:43, it might not look like that at 1 o'clock. I don't think it will, but it might not. Oh, we got vol trader here too. Okay. That's the short version of the story. Let me just take a look if there's anything else on my note that my subscribers get. And, here you get the whole roadmap with all the chop zones and all the levels. Here's the I did a short volatility thing today. So vol didn't drop. The spot is kind of holding. If vol stays bid and can't reclaim 625.40, the tape says air pocket capable. That's what I'm seeing there. And the rest of it's the trading view that you see here in the cheat card. And so we got everything here in a nice, neat card. And that's it. So let's get back to here. Let's take a quick look at options depth. Even though we looked at it before, there's been some shifting sands, the little tails here. Something happened. The little tails here kind of show what moved. So the 69.45s got out of the way. Interesting. So that kind of opens up the top a little bit. Should we get and stay over 25? We got this little nub at 40 still, but then the top kind of opens up a little bit to 55, 70, and then we have all this stuff. The bottom, pretty sticky here, down between 69.25 and 69.05 with this little area here. We have this double strike here at 6,900, 69. So we could kind of if we break through 6,900, 6,905, there's not a lot to stop it down to 69.85, which is 50 points from here-ish. I'm not sure where we are. And then we have 68.70, kind of looks pretty solid. And if we just look at this is option depth, by the way. Forget positive gamma, negative gamma. What gamma are we in? Where gamma locally is thin. We're pretty much free to move around the cabin from a gamma point of view, anywhere from, where are we here? 69, 10, 15-ish, anywhere from around here to really up here. Kind of free to move around the cabin with potential stop at 69.20, potential drift down to 68.90 at the low. Couldn't get down to 69.80, so you could sell puts there and sweat it out and probably be okay. And on top, if things get crazy, 69.80-ish, 85 yesterday's high is where we end up. Okay, and this kind of running commentary goes on all day long in the Discord. Let me move this up here. Hold on. Okay. Go ahead, Chewy. Let's hear what you got for us.
All right. Hope you guys paid attention to yesterday's levels. There's a ton of money to be made using them. I suggest that if you're not paying attention to them and it's something that you're kind of curious about, take a look at where the levels were at the end of the day update so you can see how well they reacted. Today,
so you mean do an end of day review of the chart and the levels and to see how we traded? Oh my God, whoever thought of that? Kind of standard what professional traders do.
Right. Guys, and just as a quick learning bit, you definitely want to do it on the days you lose money, more so than the days that you make money. I think a lot of us, while we're learning to trade, we lose money and we go, screw this, I'm out. And there's so much education that you're missing out in that loss. So pay attention to that. Let me pull up my chart here so I can narrate along this. Okay, so first thing I'm seeing here is this range between 69.95 down to 69.65. This kind of area here. I was hoping for a push up here for a reject. That way we wouldn't reject it as hard during the session, but it looks like we didn't get that. What I'd be looking for right now is a break below 69.65 down to 69.50 for a decent bounce to the upside here. We might get a slip below, a quick one for a bounce down here.
So how many points is that from here?
From where we are, one second. About 35 points.
Wow. Okay. So basically the whole expected move. Okay.
Yeah. I would hope we don't see the whole expected move to the downside. I personally like to see some upside today, but I'm preparing for either direction. That's kind of it for here. In case we go upside, I think if we can break 69.95, we're going to have some fun to the upside here. This is kind of the big test I have. And if we can do this, yes, pay attention to these little reject zones to maybe take some profit. But I do think it would be a nice runner to hold.
And 69.95 ES-ish is like 40, 45, kind of breaking out of that trap zone.
Mm-hmm.
Okay. All right. Kind of makes sense. I'm just looking at the action now, and the action looks kind of shitty on the chart.
It does, yeah. Let's cross our fingers that it's still early.
Right. And it might look shitty until the Supreme Court decision. I don't really know. Good morning, everyone. Somebody just said good morning. And it might look shitty until the Supreme Court decision, although, like I said, I always assume, and that doesn't mean it's right, it might not be, that the decision is baked in. We kind of know they're gonna overturn it, and now you have two narratives. You have the inflation will go down narrative, that's good, versus those tariffs actually do generate revenue, half a trillion, whatever it is. And so Trump's going to run it hot. We know that. And so that's another funding source to pay for some of this stuff that is removed. And so treasury issuance, yield curve stuff, whatever. But I think that's baked in already. At least if I were an algo, I would have baked that in a while ago, with maybe little hedges in case I was wrong, And so this last minute jockeying, I don't know. That's just
when you say baked in, do you also account for volatility?
That's a good question. A little bit, but not as much. I'm thinking more of positioning.
Yeah.
The volatility tends to, again, for whatever reason, everybody knows whatever is going to happen is going to happen. The CPI, the this, the that, the Trump thing. But it's like they wait to the last minute to buy short-term term insurance rather than whole life. It just seems to be the style these days,
Yeah.
I'm just going to pay up, in case we have a fire the next week or two. That's it. I'm not interested in anything else. It just seems to be the zeitgeist these days.
Whole life seems too smart to do.
Yeah. Why do whole life? We actually can get something out of it at the end of the day. You may lose something, but you still have some cash value. When I could just buy term insurance, buy cheap out of the money puts, and piss them away, and maybe hit the lotto.
Yeah.
That's kind of how I look at it. But what do I know? When I run my hedge fund, I'll do it differently. Okay, vol trader, what do you got for us?
So, can you hear me?
Yes, loud and clear.
Okay. So first of all, you probably missed the message I sent you on the Discord that we have a power outage. So I don't have the stuff, the machines, the whatever. Only thing that I find interesting today, I think this pre-market rejection levels. So if we're talking indexes, NDX 25,640 and SPX say 6940, right? If we reclaim these, enough that we reclaim these levels from here on, meaning like a half an hour bar closing above 6940 SPX or closing above 25,640 NDX. For me, that would be a bullish sign, and we would just spike back up to probably to the mid-range of yesterday. But until that happens, we got the downside targets that you guys mentioned. So, 6,900 and 6,880 or so. So for me, it's pretty clear cut. Those levels of pre-market rejection, what we have the last hour or so, that pretty much is the line in the sand as I see it. Data didn't, from my perspective, I can't show the slides because I don't have access to the machine, but while preparing them, I didn't see anything too much, interesting. A bit of negative positioning shifts between yesterday and today, but nothing serious. So this could go either way. And those levels, again, 25,640 on NDX and 6940 on SPX. That's my line in the sand between being short underneath or long above. That's it.
Okay, and actually, I just want to show the chart here because
wait, Doc. One more thing. Please. Finally, you remember the VIX spreads that I did, which you recommended against?
Yes.
Right. So those were done 10 days ago, before all the events of Venezuela, before the Fed takeover, before the Iranian escalation, right? So those were done 10 days ago. They managed to lost some 15%, even though the events are definitely negative. But today, they basically are trading back to the entry levels. So from my perspective, regardless of how anyone would judge VIX, implied volatility, at the money, not on the whatever, a true position shows that today there's an elevation of the vol surface looking out until the end of March. So it's basically trading back to my entry levels. And this means there's some anxiety in the market as we're, I don't know, maybe approaching 6,900, or the various courts, be it Elon Musk and the other guys fighting over AI, or the stuff you mentioned, or the Iranian thing. Market is a bit more anxious than it was the last 10 days.
And there's more than one way to skin a cat category. I'm not going to go too deeply into this. Similar VIX trade I took using broker wing flies is up 44%. So it can be break even up 44%.
You did what?
Depending how you like
you
it.
did what? Which position is this?
This is a February VIX.
So your February VIX that you opened when?
Around when you did it, maybe a day before. I legged into it around the same time.
So basically, the February complex moved higher than the March complex, which is
well. If you take a look, the profit is not coming from, even though VIX went up through the 15. That is still losing money. The money is coming from
the position. Yeah, the position that you have is obviously the future for February, right? That is trading a different spot than than the spot. So the fact that the VIX, that the index is going above 15 doesn't necessarily mean it will influence us positively. But interesting that your position had made money and mine lost.
So, and that's it's more than one way to skin a cat category. Mine is obviously riskier because I have broker wing flies and all that, which I like to do. I don't like to pay for it. I like to do it for free. I like to let Mexico pay for it.
But either way, the market is very resilient. I mean, I think a lot of foreigners are out of the U.S. markets for the various reasons that happened the last couple of months.
Yeah, there's a lot of the U.S. exceptionalism trade is kind of dead. Yeah,
so for the U.S. guys, they don't give a shit until it doesn't move, right? So that's why there's no real bid into future volatility, even though all the events that happen, right? But remember that these VIX positions that we do or others do, it's basically a lotto ticket because, for example, the March 17, my position, the implied VIX is 19. So it's already 4 or 5 points above the spot, right?
Yeah.
So I need the VIX to go to 30 to make money, yeah?
I want to point something out to the people, exactly. So even though VIX went up, whatever went up, 4 points, 3-4 points since the position was put on, at 18 or 20, it's still not realizing because 18 or 19 is what's factored in. Now it's even funkier here, funky technical term. Look at the 3-month volatility here. Unless I have the wrong date. So here's the 3 months is 18, 19, what we would expect. And let me just make sure I have the right thing. What do you have for the 1 month? I have 18. I have them flat. That doesn't make sense. Do I have the wrong thing here?
Well, 30 days out, it's trading around 16.
Okay, so why don't I see it here? Where the hell is it?
By the way, 30 days out is the original VIX, yeah?
Right.
It's a constant 30-day out.
Right. Constant maturity.
But it's pretty crazy that nothing, basically there's no demand for like hedging, or there's no anxiety. I mean, the US market looking into the future says only one thing: this market just goes up. That's it, right? There's
Well,
nothing.
the hedging demand, according to the CBOE, is in the 10 delta puts. The 10 delta put to the 25 delta put ratio, the
Well,
price.
what is that? That's like
That's crash
4%
protection.
lower.
That's crash protection, right? That's
Yeah, crash protection. Yeah, I mean, it's like a fucking lotto thing. But yesterday I saw a post. I don't remember from which, but this was a Goldman Sachs snippet, like one slider, that showed that prime brokers are lowering the borrowing cost for leverage positions to their hedge funds because the hedge funds have reduced dramatically their stock exposure, and so they're not borrowing money from prime brokers, not for either shorting or for going long leverage. And the chart shows that every time that borrowing benchmark rate, right? Every time it drops below a certain threshold. Looking back 50 years or so, 20 years, every time it dropped that low, meaning there's no demand for leverage positions, in a matter of 2 to 3 weeks, the SPX corrected 5 to 10%. So from Goldman Sachs, they're saying that basically hedge funds have no appetite to further upside the market, especially not leveraged. And if a hedge fund doesn't leverage its position, it's as if it's not in the market in anyways.
Right.
And so based on that, we have a window of say end of June, end of January, beginning of February, where the market is supposed to correct. So
After OPEX, we tend to have a period of some kind of instability. Somebody asked a question here: what indicator do you use? Okay, so I don't use an indicator per se, like a MACD or whatever. I use a combination of things. The main thing I'm using is a market maker gamma exposure, where the market makers are going to have to buy prescription or have to sell prescription. Conditional. If we go there, they have to. If we don't, they don't. Conditional. I use that as the main thing. I'm going to use the expected move as priced in by the options market for the daily and the weekly to get an idea of range. So, for example, here's a weekly expected move from last Friday to this Friday. And where are we? Right in the middle. Thank you very much. Thank you very much. Feels like a lot, but basically nothing happened from the expected move perspective. And
so your position that you set up Monday is basically it's decayed already, most of it, because there's only one day left.
Yeah. It's basically okay. Thank you. Give me the money.
When are you starting to set up the next week's position?
I usually wait until Friday morning, but I'm really tempted to maybe enter gingerly today, maybe with a little broker wing fly in case we get an outsized move, but I don't think we get one. So I have to think it through and look at what the positioning is. And so just to answer this gentleman's question, the other thing I look at is, and you can't see, it's just kind of multi-time frame analysis, old-fashioned look left and where the local lows and highs and pivots are, and where the MAs are. It's actually easier to see on this. I was looking at the chart before, and I was showing you guys the chart before. If we look at the chart, look left. Here's where the zones are. Look left. Here's where the buyer showed up. Look left. Here's where the buyer showed up in the 6,800. Look left, the gap. So these are going to be factored in along with the expected move, along with the gamma zones, along with what Vol Trader and Chewy tell me, and that's where I get it from. So it's not an indicator, if that answers the question. They tricked you yesterday. That's okay. You're going to trick them today. And so the magnets are going to be negative gamma areas where market makers are short if we head in that direction. And the support resistance areas are going to be these big bars, these 69.25 where we stop. That doesn't mean it can't break. Usually it takes high volatility to make it break. However, we already got the volatility spike, which brought us down to here. So, like I said in my note, it's going to take volatility to stay here and even go a little higher for this to break. And then 6,900 would be the next. Just trust your eyes. Where do we go if we break through here? We go here. Where do we go if we stay above here? We go somewhere in here and stop there. I mean, it's after a while looking at this, you see the path. The path is like laid out. Does that answer your question? I hope it does.
Which court hearing were you referring to earlier?
Which what?
Which court hearing? You said something about
Oh, Supreme Court. So the
Next week.
Supreme
about
Court,
what?
about the tariffs. There was whatever it was, a challenge to the legality of Trump's tariffs because he said,
Okay.
for national security, whatever he said. The court said someone said bullshit. The lower court said, yeah, bullshit. Now, it's not all the tariffs. There's some of the tariffs that were kind of like, I don't know what we call it, retaliatory, or like England charges us this, or we're charging them that. That they said was kosher. But then some of the other tariffs that were like for national security or whatever, the court said BS. And now the Supreme Court's going to decide, and the poly market or whatever says like 80% chance it gets overturned. And I don't know if the market's going to like it or not, but I think that's what's baked in.
Okay.
Yeah, so that's 10 o'clock. And we have, of course, we have Fed heads talking today too. And so, of course, they're going to be asking questions about the Powell indictment thing, et cetera, et cetera.
When is that? When is
Huh?
that thing? When who's talking when?
We have different Fed people giving speeches. Okay.
Oh, Fed
Do a
people.
lot
Okay,
today, actually.
okay.
On your brokering flags, if 5-week spikes and more creates a loss, even if the strikes haven't entered that zone. Has it ever happened? How do you repair it? Yes, it's happened, and I generally don't repair it. I generally might sell more calls or monetize pieces and move things around. It's, I think on one occasion or two occasions I took a loss, and it was only because Lizard Brain grabbed the mouse and it looked kind of shitty. And if I had just held on to it and done the math, it would have been fine. But, yeah, and that's really the short version of the answer. But it's tricky. But so how would I repair it if I got nervous? Generally, I might roll the short calls up a little bit and take a loss. I might roll the whole structure up. I might sell something higher still, like a spread or something, to give me some kind of extra premium in case it doesn't go down, something like that. Something like that. I didn't even get killed in August when we went in April when we went crazy. Didn't even get killed then. So
How did you manage that? I did. I got hurt there.
I was positioned.
Like, did you have your credit put spreads on or what?
I'm trying to remember. It was so long ago. I think we saw it coming. We meaning this guy here,
Who is this guy here?
Z Contrarian.
Oh, the contrarian, yeah.
Yeah,
He's very good.
Yeah, he's good. He saw it coming in February, March, whatever. So he positioned with whatever kind of, I don't remember what the structure was. He does ratios. He doesn't even do broker wing flies. He'll buy one, sell two. or buy one, sell three. And so I did a variation of his with a brokering fly, and it worked out fine. And since doing that, I've been following him for about 2 years. Since doing that, I've kind of learned to adopt my own version of his stuff. When he doesn't put one on, when he puts one on, I kind of follow it like a soldier, if it makes sense. And so far, they make sense. I've never seen one that I go, "What are you thinking?" So yeah. So a good mentor or a good follow is worth something too, Sometimes you don't have to reinvent the wheel.
Okay, good.
9/11, 9/11. Oh my God, it's 9/11. A day that you'll live in infamy. Did that answer your question, Perry? I mean, and again, I'll say one more thing. It's always discretionary, not mechanical. So it depends what else I see. Why VIX spiked? Is it a 9-day thing? Is it because we had CPI or because something happened and I expect it to go down versus I think it's the beginning of something? And so it's not going to be mechanical. It's going to be at my discretion. It's going to be based on the big picture, not based on I'm down X amount. Would I do an iron butterfly? I kind of think it's the opposite. I kind of think the volatility, well, maybe selling an iron butterfly, I kind of think the volatility is priced in and that the volatility gets sucked out. So I'm not sure. I don't know that you could get enough premium. Well, maybe you could. You'd have to. Would you be selling a iron fly or buying it? And if we take a quick look, okay, now I'm trying to sell these, and they're 80 cents. I'll take 80 cents for that. I'll take 80 cents for that. So if we just look at where we're trading now, We're trading at 32, right? So with a 30 expected move. So it depends how you do your flies. If you want to do an iron fly kind of according to the book, so to speak, you might do something like, if you were selling one, you might do that and go the 30-point expected move. So go over here. Let's be a little tighter. Go over here and go over here. And that would be 21 bucks if you sold it. And I don't know that that's that great. If we stay near 50, if we stay, that might not be bad. Now, if you start going tighter, say here, 12 points, then it becomes a little trickier. Now, if we're going the other way, if we're buying a fly, for 12 bucks, then we need, let's go say on a, whatever this is, 15 wide. Then we need to be over 50 or under 20. So I don't see.
But then you make only 3, yeah?
Yeah, you make 3. So, I don't see, if anything, and now you'll make
it seems very efficiently priced. You're totally against the machine, right? So
right, yeah,
there's no edge there.
I don't see and those of you that have been watching my nonsense for a while know that I like flies. So what I think I would, and let me take a look. I didn't look before. 50, 60, 70 for $1 on the upside, maybe. Let me put it in as a cheapie for now. Let me just put it in, yeah, not the right strategy, exactly. Right idea that there's something to be made here, but that's not the right strategy, which brings us to another point that I'm sure you know, but some people don't. The structure is just a structure to express a view, and if that doesn't express your view, then you look for another structure. You don't try and fit everything is not an iron condor or an iron fly or a butterfly, you know, or not the optimal way to express it, depending what your view is.
So that was a 10 wide for $0.50?
No, I put it in for $0.50. They wanted $1.
Well, if you get it for $0.50, it's a good, I mean, it's a 1 to 20 payoff.
Right.
That's nice.
I'm making them an offer they can't refuse.
Yeah, something like that.
Yeah, something like that. And see, on the put side, okay, so where do we have to go with the puts? You know, we have to see about that 6,900 maybe holding. We're heading there. So a 10 wide is 50 cents. Now, again, this is not a bad 10 wide for 45 cents. That one I'll put in the way it is. 69.10, 69.40. And I'm not looking to hold these to the end of the day. If I sell it, if I pay 50 cents and it's $1.85, whatever, and it looks like the move has stopped based on whatever I look at, I'll get in. And I sometimes will also throw in a cheapie 5 wide for 35 cents or something. I had a few of those yesterday that ended up paying for that late in the day sell off, you know, so that's kind of just, you never know. But my bias is kind of that we overtake that 40 level that a lot of people were talking about. And then guess what? We're back in the 50 range like we've been right in the middle of that expected move zone of 6,900 to 6,700 to 6,900 to 67,000 until that resolves itself. And one last thing, I think I showed you guys this before. If we just look at a multi-time frame chart, you know, if we look at the daily doesn't look terrible. If we look at the weekly, it doesn't look terrible. The 50-20 railroad tracks look okay. You know, so the chart looks like it needs to kind of consolidate through time, maybe a little, you know, little pull back into this area of 50. We're holding the top of this bar here, breaking below 6,900, breaking below here and not being able to reclaim it soon, then the chart would start looking a little nasty. Anyway, that's it. Thank you, everybody, for your attention. Like, subscribe, share. Any closing comments?
Yeah, last thing, I appreciate you guys for sending me those testimonials for Doc. If you haven't yet, please send them to me. You can DM my Discord, Twitter. You can send me an owl, whatever you need, but get me that review testimonial by the end of the week, please. Thanks.
I appreciate that. Thank you very much.
Thank you, guys. Thank you.
Thank you,
Good luck,
Val.
everybody.
Thank you, Chewy.
Thank you. Bye, Chewy. Bye, Doc.
Bye-bye.
Bye.